Okay, so as usual, we hit prices from the monthly time frame. And what is the aim of going to the monthly time frame? This is to allow us to see the overall trend of prices and the overall structure of prices. Remember that at the end of the day, we have an organized system that allows us to understand what price is doing overall on a larger framework. And we are now able to take that to the small time frame in order for us to pick a real-time trade entry opportunity. Okay, so on the monthly time frame, what do? The first thing we do is what? We identify, pinpoint the real-time point where price is at. Without any iota of doubt, this is the real-time point where price is at. As soon as this has been defined, what is the next thing we do? We read the entirety of the structures that brought prices to this point. Okay, so what is the entirety of the structures that brought prices to this point? We'll take it from the highest point, which is the structures available to us from 1975. Okay, so what are the structures? From here, we can see prices make push to this level. Then we can see prices come for an exhaustion. This is a big fractal, clearly. Then we can now see prices continue, clear bearish structures, but this time around in small fractals. We saw prices make push and exhaustion. Then prices went ahead to make small fractals, eventually establishing big fractals. We are going to read everything in its entirety. So this is push. Prices came for an exhaustion here. This is push to this level. Prices came for an exhaustion here. This is push to this level here. And what the prices do, it came for an exhaustion here, beginning to establish big fractals. Okay, so as soon as that was done, what did we see prices do again? We saw prices come here, make push to this level here. Then we saw prices come for the first phase of exhaustion. But the first phase of exhaustion was not enough to send prices to create the lower low. Then what did prices do? Prices grabbed this higher low here, then went for the second phase of exhaustion at this point. Then at the second phase of exhaustion, we now had enough bearish momentum to send prices to create the lower low at this point. Okay, so this allows us to know that what sometimes the first phase of exhaustion might not be enough to send prices fully in the direction of trend. So sometimes we might need what? Double hits of the 61.8 or double hit of the 61.8 zones in order for us to grab enough bearish pressure to send prices back. In this case, we bring out our Fibonacci from the high to the low. We will see that what prices came around the 61.8 zone the first time. This was the first time, but that was not enough. You can see prices came and grabbed an higher low. So prices got more bearish momentum when it came to hit the 61.8 zone for the second time. So that double touch around the 61.8 zone is what sent prices down to create the lower low. Okay, so it's just a very important conversation that we should know that what sometimes the first touch of the 61.8 may not be able to send prices down to create the lower low in this case, and prices might need that second touch, and that second touch will now come with more bearish momentum, okay, in order to now send prices down in order to create a lower low, as we can see in this point. Okay, so in similar happening, what are we seeing right here with prices? Okay, so let's take all of this off in order for us to continue reading our structures very clearly. Okay, so from here we saw prices make this push. First phase of exhaustion was not enough to create the lower low. What did prices do? Came for the second phase of exhaustion. Then we now saw a break of structure. It's a break of structure that confirms that the bears are ready in order to push prices down. Okay, so what did we see prices do? Prices created the lower low point at this level. Then what did we see? Prices came for the first phase of exhaustion at this point. The first phase of exhaustion in likewise pattern has happened in the past. The first phase of exhaustion was not enough to create the lower low. Instead, what did prices do? Prices grabbed an higher low, and prices is back here at around the 61.8 zone as what we would see as the second phase of exhaustion. Let's bring the Fibonacci from the high to the low. Let's make it pinpoint. Okay, you all know how to use the Fibonacci by now, from the high to the low. Okay, so we have seen clearly that what prices is currently trading around the 61.8. And what are we going to be expecting? We are going to be expecting prices to sell, okay, to create that lower low point, because this is a double touch around the 61.8 zone, and we are aware that a double touch around the 61.8 zone, prices carries more momentum, and in this case, it's going to send prices down for a very clear bearish move. However, just like it happened in the past, we are not going to confirm that the sellers are ready until we see a break of structure. Where did the break of structure happen in the past? We can see right here that the last higher low got broken here. We can zoom in order to see prices clearly. We can see that prices, started making all of these bullish movements. There were big fractals. All of these were big fractals. Eventually, prices started, making small fractals and even smaller fractals. But in all, at around the 61.8 zone, price started by breaking structure. Okay, started by breaking small fractals before eventually breaking the bigger fractals. But at least we were able to confirm the fact that the sellers are ready by seeing a break of structure. So a break of structure is what confirms that the sellers are ready. Just like it happened even at the first break of structure right here when prices came to the 61.8 zone. This was the higher low points that got broken. We must see a monthly break. Here the structures are push, exhaustion. Then prices made a bigger fractal here. Yes, push, exhaustion, push to around the 61.8 zone, and we saw a break of structure. Okay, so we can bring out our Fibonacci from the highest point here to the lowest point right here. Okay, so all of these zones, as we know, are 61.8 zones. Yes, we are all aware now that that 61.8 is a zone and not just a pinpoint level. So even when you see prices trade above 61.8, so far the movement is a retracement. Price is going to correct back into 61.8. Okay, just like we can see right here, prices corrected back into 61.8 the first time, but that move, it was just the first touch of the 61.8. It was not enough to send prices to create the lower low point. So what do prices do? Prices went back to around the 61.8 zone. And here we were now able to see a break of structure. And the second break of structure, which we identified, that happened right here. This was the last higher low that got broken. The break of structure was now able to confirm to us that yes, market is now ready to sell, and we can see our market sold back and corrected back into the 61 point all the way to create the lower low. Okay, so this means that a break of structure is very important for us to confirm that the sellers are ready. Okay, so this takes me back to a mistake that we made in our previous trade about 3 weeks ago or a month ago, where we assumed that, oh, because price is trading around the 61.8 for the second time, price is ready to sell. Okay, that is not a good assumption. That is a very poor assumption, because as traders, we should we should react. We should not, predict the market before it happens. We should allow things to happen, then then we ride. In fact, as traders, we are not supposed to start the trend. The trend is supposed to have started for us to be able to now ride and follow the trend. Okay, so we are not ones to predict that, oh, a trend is going to start and start the trend even before the trend starts. No, that is not the way to trade. For us as traders, we are supposed to allow the trend to establish. Then what do? We now ride along with the trend. Okay, so in this case, what are you seeing right here? Clearly, we can see that price is trading around the 61.8 zone. The first time prices came around the 61 point, didn't touch 61 point pinpoint. That was not enough to create the lower low. Then what did we see the second time? The second time, prices came around the 61.8 proper. It even traded above the 61.8 only to correct back into the 61.8. However, we are aware that 61.8 is a zone and not a pinpoint level. This means that prices, so far it doesn't break the structure that took it to 61.8. Price can actually still come to as much as this level before breaking structure. And any level around here, we are still going to say that any of these levels are still 61.8 zones, because these levels are still lower than this one right here. So it's still going to be a very beautiful situation. Let's make it slim. It's still going to be a very beautiful situation where we are still going to read the markets like this. Okay, just a moment. Yes, we are still going to read the markets like this. We are still going to say this is push, this is exhaustion, this is push, this is exhaustion at this level here, this is push to this point, this is exhaustion. Okay, this is push. The first exhaustion that was not enough, prices came for the second exhaustion, then this is push. So anywhere that prices reject at around this point, we are still going to say that all of these levels are still exhaustion. So far prices doesn't break the last lower high. If prices breaks the last lower high, then we've seen a break of structure. A monthly break of structure could indicate that that in this case prices is now overall bullish. But so far prices is still maintaining, the last lower high, which price has been maintaining since 1975, allowing us to know that long term GBP JPY is bearish. So far, price still maintains the last lower high. It allows us to know that yes, GBP JPY is still bearish, and anywhere at around this zone is regarded as what? As a 61.8 zone. So because of that, we must confirm that the sellers are ready by what? By a break of structure. A break of structure is what is going to allow us to know that yes, the sellers are ready, and we can be able to now sell after a break of structure happens. Okay, so now that that has been defined, what are we going to do? In that case, let's go ahead and now read the bullish structure that took prices to this 61.8 zone that prices is reacting at. Okay, so now let's go ahead and read the entirety of the structures that took prices for the second time to the 61.8 zone. What are the structures? The structures began here. This is what? Push, exhaustion at this level. Prices came, made push, exhaustion at this level, made push, exhaustion at this level. They made small fractals here, made push, exhaustion at this level. They made push to the 61.8 right here. So now this means that what? That the bullish structures are still very active, and this might just be an exhaustion for another push here before markets now break structure. Okay, so imagine where price is at now. You just assume that, oh, because price is at the second touch of 61.8, price is ready to sell, only for us to have like about 3 months of bullish move before prices now eventually sells by breaking structure. So this is the monthly time frame. Accuracy is very important. We must see what? A monthly break of structure for us to confirm that yes, the sellers are ready. Okay, and we talked about it in the past. We saw what? A break of structure here at the second touch of 61.8. This break of structure here was at the first touch of 61.8. Okay, and within this particular movement here, when prices came around the second touch, the break of structure was seen right here. The last higher low was broken right here. Even though with the break of structure, price could not create a lower low because what? Prices had not gathered enough bearish momentum at the 61.8. So what did prices now do this time around? Prices now came back to 61.8 here. And what are we now going to do? We are now going to identify the last higher low of prices. When we see the break of structure here, then yes, we will now confirm that what? If we are selling, it's now in the new direction of trend. If we are buying, it's now a retracement, and that is how price is going to move until it creates a lower low. Okay, so we must confirm that the sellers are ready by a break of structure. Like I said, as traders, we are supposed to react. Okay, we are not supposed to predict the market beforehand. We are not supposed to start a trend. We are supposed to what? Ride established trends. Okay, so right now the established trend are still the fact that what? That the bullish trend is still the most significant trend currently in the market. Okay, so like we said, it's what? It's push, exhaustion, push, exhaustion here. We can see price make push, exhaustion here, push to this level here. Then we can see prices come for an exhaustion here. The last higher low is still holding and has not been violated. Then prices came for the second touch at the 61.8 here. Then this level will still be regarded as an exhaustion until what? Until we see a break of structure. When we see a break of structure, then we'll now say that yes, this level is no more an exhaustion. The break of structure could even happen like this, where market comes and breaks structure directly. Okay, then in this case, if we are buying, it's a retracement, and if we are selling, it's in the direction of trend until prices create a lower low. But either or, a break of structure is what confirms the sellers for us. Okay, so like I said, as traders, we are meant to what? We are meant to react to prices. We are meant to ride established trends. Okay, and trends are only established by what? By a break of structure. Okay, so in this case, the last higher low is still holding. So what are we going to do? We are now going to what? Pick the last higher low and the highest point of prices in order for us to what? To ride this window, which will now be known as what? As our range of focus. Within this range of focus, because the bullish structure is still the most significant structure. Okay, because the last higher low of the bullish movement has not been broken. Okay, for example, let me draw out something for you guys here. If we see prices make movements like this is push exhaustion, right? Then we now see prices, you know, ride these bullish movements here. It came to 61.8, right? So far, the last higher low has not been broken. There's a high probability that prices could still push to the top. It could still grab an higher low and push to the top even much more, okay, to around the 61.8 zone, because 61.8 is a zone and not a pinpoint level. It could still push much more before breaking structures. Okay, so because of this, for us to confirm that yes, the bulls are done and the sellers are now ready to take over, it must be confirmed by a break of structure. Okay, so far the break of structure has not happened. This could actually just be an higher low for further takeoff before prices now break structure. Okay, and in this case, we're even dealing with the monthly time frame, so accuracy is very important. Okay, so the last higher low is still holding, even though price is trading around the 61.8 zone, but the last higher low is still holding. This means that what all of these moves, this bearish move, could actually just be a retracement to 61.8. Okay, you can see that the 61.8 as a zone is still holding here. You can see all the 61.8 zones here are still holding prices. So all this bearish move would actually just be a retracement to 61.8 for further takeoff to the top. Okay, so in this case, a break of structure, the last higher low, this is the last monthly higher low here. Okay, even though it's of a smaller fractal, but this is the last monthly higher low here. A break of structure must be seen in order for us to confirm that yes, price is ready to sell. Okay, so now that that has been done, what are we going to do? We are now going to take this window, which is our range of focus, to the weekly time frame in order for us to read the structures in its entirety. Okay, so what is going on within this range of focus, right? Okay, remember that what within this range of focus, if we are buying, it's in the direction of trend because the last higher low has not been broken. This is the last higher low. This is the last monthly higher low here. It has not been broken. So because of this, all of these sellers, all of this bearish move could actually just be a retracement for a further push to the top. Okay, so until we see a break of structure, we are not going to assume that the sellers are ready. Okay, so now let's read the structures from on the weekly time frame, but let's take the entirety of it, including the monthly structure. So all of these small structures, let's just take all of this as push exhaustion. Then the structures here, let's take all of this again as push exhaustion. Then big fractals here, push exhaustion. Then what the prices do, started small fractals here. Then what the prices do, the last higher low within the confines of this fractal, the last monthly higher low, is still holding and has not been violated. So far it has not been violated. Any move above here, if any sell above here, is a retracement, and any buy is still very much in the direction of trend. Okay, any buy is still very much in the direction of trend, and we all know the rules for buying in the direction of trend: buy towards to the highest point of the broken fractal. Okay, so now that that has been defined, what are we going to do? We will now focus on our range of focus. Okay, this is the window of our range of focus here. So now let's go ahead and read the structures within our range of focus. Okay, so what are the structures here? So the structures, picking up from here, this is what? This is push, exhaustion, small fractals, right? Then push, exhaustion. Then when I can now see price establish a bigger fractal. These structures we are still going to go over to the daily time frame to expatiate upon, but I'm sure you guys are used to this analysis now. Okay, then price made push and exhaustion, bigger fractal, then push to this level to hit the monthly 61.8 level. The 61.8 level now reacted by what? By instigating what? A break of structure. Okay, so when the break of structure happened, we knew that what? So far it's within this range of focus. If we are selling, say, retracement. Okay, so what did we see prices do? We saw that what? The entirety of the bearish structure that brought prices down for that retracement, we saw that the entirety of the bearish structure got violated here. This is push, this is exhaustion here, this is push to this level, and this is what? This is the break of structure. Let's take this aside and what? And expand the structures. Okay, so let's bring out the Fibonacci first of all to establish our retracement from the low to the high. One thing that is certain that we know is that what 61.8 is a zone. So this is 61.8, but all of these levels here that prices closed at are still 61.8 zones, and we can see how prices corrected back inside, you know, and price has been playing back and forth in and out of 61.8. But one thing that is certain is that what all of these bearish movements, as far as this moment is concerned, are still retracements. Okay, and from here we are still anticipating a bullish move to shoot prices to the entire top. Okay, so now that that has been defined, what are we going to do? We are now going to what? To read the entirety of the structure that brought prices down to the 61.8 zone to look for a break of structure. What are the entirety of the structures? From here we can see prices make push, exhaustion, push to the 61.8, then we saw the break of structure. Okay, so this break of structure now allowed us to know that what the entire bearish structure that brought prices down for that retracement to 61.8, the entire bearish structure has been broken, allowing us to know that we are buying in the direction of trend to the highest point of the broken fractal here. So where we are going is 100% clear. our job is what? Our job is just the further understanding of prices, knowing fully well that what, after a break of structure, prices comes back for what we now know as a discount. A discount is a retracement. Okay, so after the break of structure, we saw prices come for the first discount here, and we anticipated that prices pushes up to the top. However, the first discount failed. It was not enough to send prices to the top. Instead, what the prices do, it came back again for a second discount, and at this point, we are aware that what, that second touches of 61.8 always comes with what, with aggressive momentum. It always comes with a lot of momentum, and this time around we are comfortable enough to know that it's going to send prices to as much as this high. Okay, so it's important for us to be aware of this, that what, sometimes prices comes back to the 61 point for the first time is not enough. Then what will prices do to come back to the 61 point for the second time? Okay, and at the second touch of 61.8, it comes with a lot of momentum, and that sends prices, you know, to whatever direction, in the direction of trend. Okay, so let's bring out the Fibonacci of that retracement structure. It is from the low here to the high here. These are the Fibonacci of the retracement structure. So it's just a beautiful situation, right, of push to this level, exhaustion, push to this level. The entirety of the bearish structure that brought price down to 61 point, the entirety of the structure has been broken. Then what are we saying of prices? This is what, the first discount to 61.8. Okay, it failed. Then what the prices do, came back to sit properly at 61.8 for a second discount. And on smaller time frames, on the daily time frame, we have already seen the break of the entire structures that brought prices for the second time to the 61.8. Then now we are comfortable of this particular push. Okay, so what are we now going to do? We are now going to go over to the daily time frame in order for us to expatiate on this particular structure. So now let's take it to the daily time frame. What is going on within the daily time frame? Before we talk about what is going on right now, let's read the bullish structures that took prices to this point, which we know this point is what, is the monthly 61.8. Okay, the monthly 61.8 is the zone that is currently reacting with prices, right? So what did we see? We saw price start on small fractals. Okay, we saw push, exhaustion, established big fractals here, push, exhaustion. Then we saw price make push and exhaustion at this point. Then we saw price make push at this point, made exhaustion. Then we saw prices made a smaller fractal here. But within the confines of the same fractal, prices made a push to this monthly 61.8. And at the monthly 61.8, what do prices do? Prices, first of all, okay, let's even go ahead and identify this small fractal. Okay, by the time prices hit this monthly 61 point, what the prices do? It first broke the small fractal. Okay, then what the prices do, now came in and now broke the big fractal. So when prices broke the big fractal, what the prices do? Prices what? Completed this big fractal, completed the sell movement at what? At the 61.8 zone. Understanding fully well that what? That 61.8 ends what? Ends an opportunity in a retracing market. So all of these sales are nothing but retracements, and the 61.8 zone ended that opportunity. Okay, we can bring out our Fibonacci from the low here again to the high. We can see that what? We can see that the 61.8 zone here, yes, prices traded below the 61.8 without a doubt, but 61.8 is a zone and not a pinpoint area. Okay, and on the weekly time frame, which we're also going to see on the daily, the entirety of the bearish structures that brought prices down to this 61.8 zone, the entirety of the structures have been violated, allowing us to know that yes, the bulls are ready for takeoff. Okay, so what are we going to do? Let's read the entirety of the structures that brought prices down to the 61.8 zone. Okay, so what are the entirety of the structures? From here, we can see prices make push, exhaustion right here. Then here again, push, exhaustion, push to the 61.8 zone. And what? And we saw a clear break of structure. The last lower high was broken. Remember that what? Remember, let's take all of this off. Remember that this right here is not a lower high, because what? A lower low was never established. Always remember that lower highs are only established with the presence of a lower low. Okay, so if prices doesn't make a lower low, then there is no lower high. Okay, very important. Okay, so now these are the various structures, right? Push, exhaustion, push, exhaustion, push to this level. Prices came for an exhaustion at this level. Prices came for a push. This is not a lower high, okay, because price never established a lower low. So this is the last lower high. That price now eventually broke the last lower high right here. Okay, so let's bring this horizontal line out. Okay, so this level right here is what? Is the last lower high of prices, and this is where the last lower high got broken. Okay, this is the clear break of structure. Okay, so now that what a clear break of structure has been seen, what are we expecting? We're expecting a discount. We all know this, you know, we've studied the market and we've talked about this several times, that after a break of structure, what do you expect? You expect price to make a discount to the 61.8. Okay, so what did we see? We saw prices come around the 61.8 for the first time after the break of structure. Let's bring out the discount Fibonacci first of all, from the low to the high. So after the break of structure, we saw prices what? We saw prices come around the 61.8 for the first time, but it was not enough to send prices up. We are familiar with this now. That sometimes when prices comes to the 61.8, the first move might not be enough to send prices up. The first move might send prices, in this case now, to create a lower high at this point, only to come back and sit down at 61.8, and at the second touch of 61.8, it is ready for an entire takeoff to the top. Okay, so in this case, how we determine that the prices are ready for an entire takeoff to the top? First of all, we'll have to, you know, read the stories together. Okay, this was the first push that sent prices down to the 61.8. This is the discount Fibonacci. Then it was not enough to push prices to the top. Instead, what the prices do, prices came back again to 61.8, and at 61 point, what the prices do, the entirety of the structures that brought prices down to 61.8, the entirety of that structure has gotten broken. Okay, so these are the entirety of the structure that brought price down to 61 points for the second time. We just had a daily break of that structure. Okay, so within this fractal also, okay, now this was where our entry failed last week, because within this particular structure, what did we see? We should know this as a norm now, that after a break of structure, prices comes back for a 61-point retracement, right? So now prices broke this structure. Then what the prices do? It only came back for a 61.8 for the discount, and now it's ready for an entire takeoff to the top. Okay, so right now we've seen this, we are comfortable about this. Okay, and we've now accepted the fact that, okay, our entry failed last week. We thought that what? We thought that instead of prices coming to the entire 61.8, we thought that, you know, the inner resistance level would be enough for prices to get to reject for a takeoff. But apparently price did not do that. Okay, instead prices came back to its entirety to the 61.8. Okay, but before we get to that, what are we going to do? Let's just identify all of these windows here. Let's identify all of these windows here. Let's just take this window. Let's take it like this. That this window here is the 61.8. Okay, prices, remember, prices came to the 61.8 at the first time. It didn't touch 61.8 pinpoint, like as you can see. We saw this on the monthly time frame also, where price did not touch 61.8 pinpoint, only to, you know, only to attempt to go and continue in the direction of trend, only to what? Only to fail, because the bullish momentum in this case was not enough. So what is price now doing? The entire bearish, it now brought some more bearish momentum down to the 61.8, and the entire bearish momentum got broken at this point. When the entire bearish momentum got broken, what did we see? We thought that what? That this inner resistance, because sometimes after a break of structure, prices does not get to 61.8. It respects some inner resistance, in this case, turned the inner resistance to a support for takeoff. But apparently, the inner resistance failed. And what the prices do? Prices came to what? To the entire 61.8, now ready for a takeoff to the entire top. Okay, so now that this has been seen, we realize that, okay, maybe we're not just patient enough to allow prices to come back to 61.8. Okay, or maybe we were not wrong, thinking that what? Thinking that after a break of structure, after a break of this particular structure, maybe, you know, we were thinking after a break of this structure, the discounts to what? To this resistance would be enough to shoot prices back up. Okay, that's what we're thinking, but apparently maybe we were wrong. Okay, so but in that case, what are we going to do? Let's take the structures to the 4-hour time frame in order for us to read our opportunity within the 4-hour time frame. Okay, and what we are going to do on prices is that we are not going to be holding very long swings again. Instead, we are just going to be trading within the opportunity of what will now be known as what? The current structure circle. Okay, that is what, instead of holding prices from here now, instead of holding prices from here to the entire top, we can just take profits within what? The current structure circle. That is what? From here, we can see this high here. This is the current structure circle that has been broken here. This is push, exhaustion, push, exhaustion to this point, push to this level, which is now known as a 61.8 PRA, potential reversal area. Then what the prices do, prices broke structure. Then what the prices do, came back for a discount. And what, and this level here, this resistance here is going to be what, our current structure circle. Okay, this completes what, this particular structure. Break of structure, pull back to the 61 point. This is going to be our take profit. Even though we understand that yes, price is going to come to the entire high, but however, we also understand that what, that prices makes major retracements. So we don't want to be caught up in major retracements whereby we've held profits for so long only for the profits to fade off because we held beyond what a current structure circle. So in this case, after the break of this lower high, wait for the discount, which we've seen the discount, and now we'll now buy to the entire top at this level. When prices breaks here, prices comes, breaks into another window here, then we can be able to probably see if prices will maybe retest this inner resistance here, then see if a break of structure will now occur, wait for the discount to now buy to the top. Okay, so these are possibilities, you know, that prices could make. At the end of the day, we know we are coming to this monthly 61.8 because what, a break of structure had already happened here. Okay, this was the last lower high here that got broken. So all of these moves are only discounts. First discount 61.8 that failed, second discount, and the entirety of the structure that brought prices to the second discount at 61.8, the entirety of the structures have been broken, allowing us to know that the bulls are ready for takeoff. Okay, so what are we going to do now? Let's take that window to the 4-hour time frame in order for us to, you know, expand on structures and see where markets, you know, is going to next. Okay, so now let's take that to the 4-hour time frame. What is going on the 4-hour time frame? We'll now read the structures from what, from the current structure circle, which is here. So this is it. So this is what, this is push to this level, exhaustion at this level, prices came to the push, came for the exhaustion here, prices came to the push here, came for the exhaustion here. Then this was the last lower high that prices broke and now came back for the entire. So here within the confines of the same fractal, this is just a situation that prices came to the 61.8 PRA, broke structure. Now when prices broke structure, we were thinking that what, that this inner resistance was enough. In fact we had seen what, we had seen a break of structure at this inner resistance only for prices to fail. The inner resistance was not enough to what, the break of structure at the inner resistance was not enough to send prices to the top. Okay, instead it failed, it made a lower high and sent prices down to 61.8. In fact, this sell is a possible opportunity that we could have picked, understanding fully well that yes, we've seen a break of structure and what, and prices could actually be coming to the 61.8 for takeoff. So this retracement is an opportunity that we could have been able to pick, you know, after prices broke structure. Okay, but beyond that, what are we saying now for prices in the future right now? We have seen that what, this particular level failed, it was not enough, you know. Now the question is what, should we be patient to allow prices to get to the entire 61.8 before buying, you know, before placing a trade? In that case, it gives us what, more confidence. Probably that is what we'll be doing. We'll allow price to come back to the entire 61.8 before what, before picking a trade. It gives us what, very solid confidence. In this case now, what are we saying with prices? If we bring out our Fibonacci from the low to the high. Okay, let's take this out for a bit and let's make our Fibonacci pinpoint from the lowest point here. Okay, bring out our Fibonacci from the low to the high. One thing we are going to see is that what, this level here is what, is the 61.8. Okay, so this level here, we can call it what, 61.8. Okay, let's put it at 61.8 PRA. We all know PRA means what, potential reversal area. So this level here is known as what, a 61.8 what, PRA. Okay, so again, what are the structures? They are just beautiful movements of what, of push, exhaustion to this level, push, yeah, exhaustion to this level, prices made a push to this level, exhaustion to this level. This is the last lower high, then price came to the 61.8 PRA, broke structure, came back for a 61.8 retest. We all know that was 61.8 is a zone and not a pinpoint area. So even though price traded below 61.8, we are confident that it does not matter because what, 61.8 is a zone and not a pinpoint level. Okay, so all of these levels here are 61.8 PRAs, and from here we are confident of the movement of prices to as much as this level. Okay, so now it raises the questions: how can you be able to place your trade, in order to ride this opportunity? There are two ways you can place your trade. We are all familiar with what entry variation 2 and entry variation 3. Okay, before we come to that, let me just show you guys. We have entry variation 1, 2, 3. Okay, what are entry variation 1? After a break of structure, what do? If the risk reward makes sense, you can buy pinpoints at the break of structure, put your stop loss at the low, then buy to the entire top. Obviously, the risk to reward has to make sense for you to do this. Okay, so this is entry variation 1. Entry variation 2 is bringing in our knowledge of the fact that what, after a break of structure, prices comes for a discount to 61.8. Then what will you do? You can buy pinpoints at 61.8. You can buy, let's take this down. You can buy pinpoint at 61.8 with your stop loss at the low, with your take profit at the high. For in this case, 1:3 risk to reward. Okay, now there is another entry variation. Now this is entry variation 2, right? Entry variation 3 what entails what? Reading the entirety of the structure that brought prices down to 61.8 and looking for a break of the entirety of the structures. Okay, in this case, it's going to be a situation of, okay, these are the entire structure that brought prices down to 61.8. You can wait for the entire structure and what? Buy at a break of the entire structure. In fact, sometimes again, when prices breaks the entire structure, it gives another discount again before takeoff. Okay, so it could be something that what? You could buy pinpoints at the break of the entire structure if you are waiting for that, or you could buy at the discount that prices provides. Okay, sometimes it will not give discount. Once it breaks the entire structure that brought prices down, it just heads straight to take profit, and sometimes it gives the discount. Okay, so it just depends on how you want to be able to capitalize on such opportunities. Okay, so now that has been defined, how can we be able to trade this opportunity? Now we've seen price at 61.8 PRA, and right now entry variation 2 and entry variation 3 are available to us. One is that what, which I sent to our platform, that what our most conservative way of entry is what? Buying here, putting the stop loss at the low. We all know that the stop loss has to be below this point. The stop loss has to be below this point a little bit. It doesn't have to be too much. Okay, so that at least we have a reasonable risk to reward. For example, let's see where the pinpoint level here is. Just a moment. Yeah, this is where the pinpoint level is. Okay, so our stop loss can just be a little bit below it right here, while our take profit is at the high at this point for what? For a 1:4 risk to reward. Okay, so in this case, it's a 1:4 risk to reward. This means that what? This is the most conservative entry. Okay, here now it's a situation of, just buy and allow prices to play out for a very beautiful 1:4 risk to reward. From here to here, it could take about 2 weeks, depending on how fast price moves. It could take about 2 weeks. It could take less. It could take more. Okay, so it just depends. Okay, so but this is the most conservative entry. It's just a very beautiful situation of what? Okay, of push to this level, exhaustion, push to this level, exhaustion, push, yeah, big fractals, exhaustion, came to the 61.8 PRA, broke structure, came back to the 61.8, and we are even able to get an entry a little bit below 61.8, and we decided to just buy pinpoint using entry variation 2 and ride to the entire top here. Okay, so this is very beautiful for 1:4. 1:4 means that what? If you are risking $100 on the line, you go with $400. If you're risking $1,000, you go with $4,000. And that is how it goes. Okay, so this is a very beautiful 1:4 risk to reward, and this is the most conservative entry. However, there's another entry again, which is what? Our entry variation 3. Okay, which is what we are most likely going to apply on this particular trade. Instead of entering using entry variation 2, if we are patient enough to allow entry variation 3, we probably would get even the best risk to reward. And what does entry variation 3 entail? It entails what? Reading the entirety of the structures that brought prices down to the 61.8. These are the entirety of the structures. Push, exhaustion. Now we can see prices stretch to as much as this level here. We could see prices probably come back to this level, turn this resistance, turn this support to a resistance here, and what? And form into the same structures, and we could see a break of structure. Maybe when the break of structure happens, in order for us to get a good risk to reward, we could wait for a discount again. Remember I told you that sometimes with entry variation 3, prices still gives a discount again, okay? And this could now mean that what we would now buy at around somewhere around here, put our stop loss around here, and right to this point. Interesting enough, it's also a very similar 1:4. Okay, so that means that if you actually want to buy right now, you might not be doing bad. That is what, if you want to buy on market opening and just right to the top at this level, we'll get 1:4. If we are waiting for entry variation 3, we might also be getting the same 1:4. That is the irony of it. You understand? So remember that you can actually use either entry variation 1, 2, or 3. It just depends. So right here we can see that both entry variation 2 and both entry variation 3 will still offer us an exact 1:4. So that means that on market opening, we can actually decide to just buy on market opening, which is using entry variation 2. This is our take profit at this level. Then our stop loss a little bit below here. This is our stop loss at this level. For the exact same 1:4. If we wait for the discounts, we might be getting the same 1:4 also. So we could just decide to just buy in its entirety, for 1:4. Because for us to be able to buy, and once you use entry variation 3, we must see a break of the entirety of the structures that brought prices down. And these are the structures. Push. You cannot buy on small fractals, okay? Because if you buy on small fractals, prices might be coming to 61.8, only to come and establish the big fractal, break, give a discount, and take off. So we won't buy on small fractals. The proper way is to read the entire structures that brought prices down. And when you read the entire structures that brought prices down, what do? Price could come back here, like I said, now form into the entire structure by turning this support point to a resistance here, come back, break structure, now give a discount for a takeoff. So what are we going to do? We could either decide to enter using entry variation 3, or decide to use entry variation 2. And it's possible entry variation 3 gives us a better risk to reward. However, both are very valuable, you understand? And as traders, our job is decision making. We've seen that, okay, there's an entry for entry variation 4. If you want to take a risk of $100 on it, very beautiful. If you have a prop firm, and if you have a 50K prop firm and you risk 1% per trade, you can throw $500 on the line, and ride for $2,000 on take profits. Okay, so this is how it works, and this is how we are able to pick trades for maximum profits. Okay, so like we said, we'll probably, for us to get the best trades, instead of waiting for prices, instead of trading when prices gets to like for example in this type of trade, after the break of structure happened, we saw prices come back to this level. We can see this level here. This level here is a resistance is an inner resistance, okay, and prices formed as if it wants to turn this inner resistance to a support. In fact, on the 1 hour time frame, we had seen a break of structure, only for the structure to fail. We saw prices make push, exhaustion, we saw prices make push, and we saw a break of structure here. Okay, all of these movements was during the FOMC when Trump was making a speech. Okay, so all of these movements, actually failed. That means that this particular resistance turn support PRA failed, only for prices to come back to 61.8 PRA. Okay, so there are 2 ways you can trade this. One, you can be more patient. Instead of us looking for support turn resistance, after a break of structure, we could actually decide it's just a situation like this, like push, like this, exhaustion, push, break of structure. Instead of us looking for in this case, resistance turn support for takeoff, we could just have patience and see and allow price to come to 61.8. At 61.8, we can buy pinpoint or wait for a break of structure. In this case, we're entering more concrete trades. These are what you call higher probability trades. However, if you decide that you want to buy after prices turns this resistance here to a support, this could be a low probability trade, because if you buy here, prices might just complete right here, only to come back to 61.8 for takeoff. So this was exactly what happened to us last week. There was a break after prices turned the resistance here to a support. We saw the break of structure only for prices to fail and come to the entire 61.8. So if you know that what you are buying and you are using resistance turn support, instead of waiting for the entire 61.8 as your discount, then you should know that it's a low probability trade. Yes, prices from here can actually take off. Prices could actually take off to the top after, turning a resistance here to a support. Price could actually, keep taking off to the entire top without coming to 61.8. But at least we are aware that it is a low probability trade, and that will help us contain our risk. You understand? So, because as at that point, just like we said, this level here was a resistance slash support PRA, only for it to fail. Prices made all of these movements here. Okay, it even broke structure at the resistance slash support PRA only for it to fail, just because it wants to come to the 61.8 PRA in order to have a proper discount. Okay, which is 61.8 PRAs are always the most proper discounts. Okay, so in this type of case, there are two ways that we can do this, which is one, if we are waiting for prices to come to the 61.8 PRA instead of any support turn resistance, then that means that we should be ready to let some trades go. Because yes, there are going to be times where prices, instead of coming to the entirety of the 61.8, prices will just come to the support turn resistance PRA. Prices could actually have done this, come to the support resistance slash support PRA and take off. Okay, so this means that if we want to wait for price to get to 61.8, we have higher probability trades, but that will mean that there are going to be some trades that we are going to let go. Okay, because some trades will come here and actually take off from here. However, there are also probability that price will come pinpoint to 61.8. Now, this will now give us assurance. This is a higher probability trade. We've seen a full discount. Okay, because our discount within our strategy is that price would come for a full 61.8 retracement. However, it was a discovery that sometimes prices does not come to the entire 61.8. It was that discovery that now allowed us to say that, okay, let's identify resistance, inner resistance or support. In this case, inner resistance and support, because it's a resistance here, it's a support here also, but it failed. And after prices failed, what the prices do, it came back to the entirety of the 61.8 for takeoff. So this is just one of those stop losses that happen that just calls for a conversation if one should either wait for the entire 61.8, or maybe if you are not entering on the entire 61.8, if you know that you want to enter on a discount where prices comes to a resistance on support, or a support on resistance, either or, then you should then you should be ready to use a lower risk. Okay, so like for example, in this case here, before prices broke, okay, as at that time, this was the last lower IP point. This was the last lower IP point. Let's take all of this out. Before prices broke, we saw prices make movements like this. Remember, this was push, exhaustion at that point within small fractal. This was push, exhaustion at that point. Then this was push. Then what did prices do after this push? Prices came to an equal level right here. So after prices came to an equal level, what did we see prices do? Prices came for a discount after going to equal level. Okay, so prices came for the discounts here. Okay, so at this discount, as we know, we could have decided to buy pinpoint at 61.8. We are familiar with this now. Okay, so prices came to the equal level here, then came to the discount at the 61.8. So we could have chosen to buy pinpoint at the 61.8, put our stop loss at the low right here, then buy to the top right here for about for about a 1:2 plus risk to reward. Okay, so this is just going to be a situation of an inverse head and shoulder. Okay, however, we could have also decided to use entry variation 3, which entails to read the entirety of the structure that brought prices down and buy at a break of the structure. Here we've seen a break of structure. You can buy pinpoint at the break of structure. However, we're also aware again that with entry variation 3, prices also gives a discount to 61.8, which we've seen again. The price came for a discount to 61.8, which you can now buy here and take off to this level here. Okay, so let's bring out that particular Fibonacci. This is the Fibonacci here from the low to the high. then this is the buy opportunity here. Then in this case, our stop loss is going to be, it's not going to be, it's not going to be very fast. Stop loss is going to be close. Our stop loss is going to be at the break of structure here. It's going to be, because this is the structure that we entered on, break of the structure discount. So, and we can now buy to this stop for about a 1:3 risk to reward. Okay, so that's why I said that what, instead of swinging so much, because I can imagine we buying this trade, and we buying this trade at this point, and we expect markets, and we are trading outside of our immediate current structure circle. Okay, we are trading out of our immediate current structure circle, understanding fully well that after a break of structure, prices pulls back to the 61.8. So this particular 61.8, if we bought here now within this particular structure circle, this is where it ends. Okay, within this particular structure circle, this is take profit here. We would not have been in a situation whereby prices now broke into another fractal, opened this structure circle, only to now come back into 61.8, where it would have wiped out your entire profits if you held beyond where you're supposed to take profit. So this just tells us that let's take profits within our current structure circle. That is what take profit within our current fractal. So a break here, this is where has been opened there, because market came into equal level here, came for this right shoulder here. This is our take profit here. After this take profit here, what the price do? It broke into another fractal. Yes, after I break into another fractal, what are you expecting? A discount to 61.8, which we've seen. Price came to the entire discount to 61.8. So if you had bought here and say, oh, price is rejecting at a 61.8 PRA is going to the top. Yes, you are correct. But however, it's not going to allow you compound, because all your profits would have been cleared only for you to start looking for a new trade entry opportunity to buy to the top. Okay, so that just tells us, and it just reiterates the fact that we're not going to be holding long swings again. We're going to be taking short swings, and we're trading within the confines of our current structure circle. So